Thank you, Aidan. So, it's my pleasure to introduce Harry and Richard Snell. They are the engine rooms behind this business. Many of us know them as, and they have a golden reputation among us farmers as real professionals throughout the Waikato, throughout New Zealand and even in the UK. Richard spent 6 years consulting in the UK and was moved back to home soils to continue growing this business. They both have a long service to what we do. They believe in providing industry good activities, and they're driven by research and innovation. They have a continued focus on grass-based farming, and they've been champions. They've been pushing this grass stuff for a long time. Even, Farmers Weekly quote Richard in 2016 about the grass needs to become sexy again, and that's something that's we're really driven by with the Pasture Summit. And they are both really committed to developing people. And we also have Matt. Where's Matt gone? Oh, here he goes. Okay, right. So Matt is operations manager here. He studied ag science at Massey, and after which he went over to the UK for 3.5 years, where he worked on a 750 conversion self-contained unit into the New Zealand style pastoral farming. And this for him, I think, has driven him forward because he now recognises the opportunity around pasture and the pathways for people. Matt is married to Marion and he's expecting a child soon, so he's going to be father of 4 very soon. So Matt has been, he's been with Kotare for 9 years, starting out as a manager here on Ellesmere, and as the years have moved on, he's taken on more responsibility and is now operations manager. He's been 2 years. There goes, I knew that was going to happen. Right, so I'm going to welcome Harry and Richard to the stage, and we'll grab some mics for them. Can I come and get you to rescue this pull-up wherever he's gone? We're going to start. So we've got some four boards behind us. We're going to run through some information that's through these, but really you guys can read, yeah? It's the dialogue these guys are going to present that's going to link it all together for us. So we'll start with Harry. He's going to outline the history and a little bit of background about the business and about how we've grown to where we are.
Okay, thanks, Steph. I'm go back just short of 100 years, and there's still a few people around who can record that time. And when these farms were basically, this was the flats in here, and over the hill, which you'll see from our paddock drive later, were Kaikatea swamp forest, and the surrounding land had been developed. That's the rolling country, if you call it rolling to steeper country, had been and was a mixture of small sheep and sheep farms and dairy farms. And of course in that era, right through for probably the next 40 or 50 years, wool was king in this part of the world. But there was a little dairy factory, and the Kaikatea forest here got mined, mine's the wrong word, felled, and used to make butter boxes that took the butter from here and other dairy factories in 56-pound lots, wrapped in greaseproof paper, and went to the UK, and mostly. And that was the way of the world. And once the Kaikatea forest had been felled, the flats that we're on now and over the ridge were reverted to being pussy willow and were basically waste ground. Tony and Selmy, this is a story as well of the good and the bad of tariffs, which are very topical at the moment. Tony and Selmy was an enterprising man, and he came from a farming background, but he set up a business called Fabia Shoes. That's manufacturing shoes, believe it or not. some of you may recall that in Kuiti, and the retail arm that went with it. That was all protected out of import licensing and tariffs. So Tony and Silmy didn't think tariffs were too bad a thing, and so he used that in the late 60s. He said, I'm making a lot of money, the taxman's after me, I like farming, so this became his hobby. The purchase of the first farm next at the end of Gadsby Road, and then over the next 30 years or 25 years he purchased some further 16 individual blocks of land and accumulated some lease land, mainly Maori lease land, and to create this business, and happily boxed along. This was the nice soak-hole for his profits, and then suddenly in the mid-80s Roger Douglas came along and changed his world, and Fabia Shoes was no longer protected, and Tony said, well, we've got to do something about this. I'm not making any money doing shoes, and I'm not making a lot of money farming. And that's when I got involved as a farm consultant, and we started talking about the relative merits of dairy farming, which was pretty early work. But he had built really good races, and you've using the line rock from just up the road, and so the framework was here for dairy conversion, and it took a year or two. But the first shed was built in the 90s, if my memory is correct, and it was a 42 male herringbone, and from there on Tony was a committed dairy farmer, and so from that period through till 2005 he basically built another 2 cows, and the last one he built in 405, and then decided at 70 years old that he'd done his stint, and through my connection with JD and Arnie Wallace, we did an in-house deal, and in August 2005 JD and Arnie Wallace came in here and took over these farms. That's been a progress. Within a year they had involved our family group as basically 50% shareholders, and we continued like that for some time, acquired little bits more of land, and just really steady development, and probably it faced its first major test in the downturn of 14, 15, 16, or 13, 14, 15, forget about those times, when we slipped to an under $4 milk price, and these businesses had reached a stage, thank goodness, that they, we were not caught on the hop with a lot of debt and a development phase, so we were able to weather that storm, and then since then it's been pretty positive sailing, with JD and Arnie Wallace exiting, and you'll see one of the objectives of this business is that shareholders should come and go, and that was achieved in 2018, and basically it's been the status quo ever since. So really the other major thing that's happened here is probably land development, and I think I'd like to leave that topic until we're in the paddock, because we've got something to show you about what's been done. But it has been on the basis of, we've taken our philosophy into the last 10 years probably, I guess, of can we make this land more productive, and if we can't, and can't make money out of it, we should retire it. Now that doesn't apply a lot on this particular property, but does apply onto the other 2 properties that adjoin us, or there's 3 more properties, and also our properties up at Rangitoto, which have got a major retirement program that's underway. So the land development has evolved around drainage, and I think maybe we can explain that.
Excellent. We'll definitely drill into that when we're up on session 2. Now Richard, can you give us just an over main structure of the business, farms, number of farms, just...
Yeah, sure. So welcome everybody on behalf of the Snell family and the Wallace family. It's great to have you all today. So Kotare Pastoral as of today is a 6 dairy farm entity. There's 4 owned owned and operated in the pod here. So that's the concept that we, I guess one of the real bigger appeals for the original purchase was the pod, the efficiencies of running that with staff and I guess just time. So yeah, it's a bit at scale. It makes a lot of gains. We've got 3 lease farms. We lease 2 dairy farms up at Rangitoto off the Wallace family. And we also a major shareholder in a lease farm in Te Awamu for the Stevenson family. So closing in on sort of by next year, it's about a 5,000 cow business. But yeah, a very couple of farm systems.
And total milk solids?
About 1.5.
Excellent. Okay, so we've got a good picture of this large scale business. Now we need to kind of drill in with Richard. What are these farming principles?
Sure.
What are these business principles?
I'll just go quickly. I think it's important on this business goals and strategy. Like one of the differences today is that there's a board running it, multiple shareholders, senior staff. You've got lots of key stakeholders, and it's quite hard to. I mean, you look up there and you sort of think, oh, it's a pretty modest dividend payment, but I mean, and then the other angle is we'd all love to be Warren Buffett and tell our shareholders that you get nothing, but you can't do that. I think Harry's probably been a big champion that 50, 60 years of running these sort of businesses, something coming out is important, keeps people happy. So, we do set a little target, and bear in mind it is quite a big asset. So, we've just got modest dividend targets. We are growth driven. It's very hard in agriculture to grow and pay dividend, but we've got some goals around 5% per annum growth. And we talk about, and really important to us is keeping farming fun. It's not a cliche, and it's certainly not it doesn't mean getting on the piss with your staff or anything like that, although we do enjoy occasional events. It's more around that one of the points over there about being up for the scrap. Farming does have to be fun. There's a lot of sort of things against you. I have smaller clients with and welfare, the public's against it, and I think it's all wrong. I mean, I remind them Country Calendar is the highest rated show in New Zealand, so, and I think in our world, we have a group mentality. You have your Harry Snells, you have your Paul Birds, Simon Wallace, and Bosch. We have good people, we have good accountants, access to good bank managers, and we are lucky enough to attract some positive young Kiwi managers and things that are up for it. So to us, that's fun. And in terms of, I guess, financial things here, like this return on asset, that's we're really proud of that. I mean, an 8% return at what is a very low payout, I think, in real terms last year down here is really good. We've got, and if you look, the other big one figure for us is the EFS. I mean, we're always looking at EFS per hectare. I note for our own internal benchmarking, we actually don't include Fonterra dividend because we just sort of don't, we've got farms that do 1,300, shared up to 1,300 solids a hectare. We've got farms that are 700 solids a hectare or 800 solids, so it's pretty hard, to put in the Fonterra dividend in our own EFS benchmarking. But that's probably our very biggest, with key KPI, we're looking at profit per hectare all the time. I know we've got, amongst the Snell and the Wallace family businesses, we have farms that do quite a lot better than that, but they are also worth a bit more. So it comes back to the 8, none of them are probably doing better than what Ellesmere achieved at the 8.6 or something percent return on capital last year.
So this data we can see up here is all from this farm. Yeah.
And then I think moving through these, look, the simple, profitable, pasture-based system, that's just who we are. We enjoy that, we know that, and we've nailed our colours to that for a long time, and we haven't got bored with it. And that's quite easily, we've had scale, and scale brings other challenges, and we've always had growth, and so, we've just stuck to our knitting there. You know, there's not one meal feed or feed pad anywhere in the system, and a few farms in the wider group as well. So we are happy to invest. I think, you know, Harry will talk about drainage and other enhancements, but you know, fencing, fencing up waterways. We're happy to invest in staff housing. We've spent a lot on staff housing over the years. I mean, we have to. It's reluctantly, but we've got to. You know, you have to invest in compliance now. And you get your returns on your floyd and things. So, one of our key things here is around. We want to be a business where hands-on, you know, good young farmers can generate wealth. So we've got, and you'll cover that off in the panel, but that's a good example of some guys that have come into the system, you know, trustworthy, delivering elite results, and then they've got a pathway in front of them to create some wealth, and we all win.
So we see here, from a top level, we've got high operating business with good values and principles, and then we've got this simple repetitive farm system.
We're not trying to top 1%, we're not chasing around like it's too hard. And we have some farms that might get into top 5% profit type things in there, but they're worth a bit more, so their return on capital might not be. But you know, look, with these farms down here, and I think that's important for Kotare. Like we like these farms a lot, but they are B-class farms probably, or a couple. This is a nice farm, but Wicklow and a couple of the bigger farms, you know, certainly are. We're just trying to be top 25%. We're not trying, because we know that delivers what we need from the business. A big strategy for us when you're multi-unit is the control over support land, and this has probably been, Harry's been big on this. There's been stages through both, you know, the business. We're buying a dry stock farm takes a bit of courage because its returns are pretty hard to justify, but in terms of that security of grazing, the quality of the grazing, you know, we don't have heifers coming back 1st of May, so you know that's in a drought. So you know those things help. Harry might have a comment on the value of the support farms, even though not necessarily directly.
The main support farm we've got, we didn't buy it particularly well. Bought it in 07, right just before the GFC, and for a long time it was one of the nearest farms sold in the King Country, and I think we've just probably got our money back in capital, but we've poured a lot into it to turn it into a high-powered unit. But it is priceless in terms of the guys running these farms know that if they've got 200 cows going off for the winter, they are off. That will happen come hill or high water, and that control and on scale, you can't shift your grazing around. So we're pretty happy with that decision, and we tried to buy it well in terms of its technical attributes, and we've continued that with one or two other small support farms as well. Very important to us.
But a real challenge to make, you know, large-scale dairy support farms make a lot of money. It's so if anyone's got that mastered, welcome to chat over a beer later, maybe. Look, I guess the other big one here around the science over sales. This is really passionate of ours, and we're fortunate. You know, Harry, a strong science background, me a little bit, and we've got some good support, but we haven't, I think, been sucked into the sales-based advice in the last 20 years. And I think I'll give you a couple of stories around this and why I might expand. So when I first got a job as a CEO in 2005 or 6.
That was with DairyNZ.
Yeah, it was the Excel and then merged, so yeah. I went to this first week of training. It was got taught about the programmed approach for regrassing, and it was I won't name the company that was doing it. It was impressive, and it was multiple sprays, turnip barcamp turnip crop, learned how to grow great barcamp turnips, multiple sprays, kill all the weeds, annual cycle. Then you know it was a long detailed. I got home that night and ripped into all excited and told Dad because we've never grown turnips on our farms, and said, oh, look, I've just learned the programmed approach, and ran it through him, and all these sort of half an hour spiel on what I'd learned that day, and he just turned to me and said, best practice, everything makes a lot of other people money. So, you know, you're not, I guess, you know, that was sort of hammered into me early. Another story, when I arrived at the UK, I did a little bit, I was doing advisory, and you sit down with the farmer, so this is 2010, and it's sort of, I guess it doesn't seem that long ago, but at the time I couldn't believe how often my clients' phones rang. Their phones rang all the time through meetings, and I just hadn't experienced that in New Zealand. And it was the seed, it was meal, it was just contractors, it was everything, you name it. Vets over there were on subscription. Subscription models give us the heebie-jeebies, you know, so all that stuff was just, I saw this and then I thought, wow, this is shocking. Get back to New Zealand 2015 and 16 and man, that gap had closed over here. So I guess for us, you know, it's pretty hard to break that down. We've sort of had it, well, I've had it beaten into me from a young age, and I've seen it professionally at scale, what it can do. So the science-based principles, you know, clover over nitrogen, there's just lots of them that drive us, and you'll see that in what we chat about today.
If I could just add one thing to our objectives over there, and I think it's very important for all of you to take this sort of little personal try. I think our education systems are failing agriculture big time, and maybe there's a tiny glint of recovery at Lincoln, but you know, the once great, for those of us who went there, Massey University Ag faculty has, in my view, lost its way to some extent, and certainly we're not generating the future scientists or those smart enough to carry on and do masterates and PhDs, and the rest of us lesser lights that just got through on C passes and C minuses and specials and all sorts of things. But it's still you know, I think one of the great treasures. I think Richard enjoyed that at Lincoln, and I can say that you know, the education that I got from the Massey University system and the math that I worked for, that gap still seems pretty missing to me. I may have it wrong, but that's an area that we as a business are trying to support with a few scholarships and other forms of education. So that's hard as well.
Yeah, just a quick note on the prioritising local service and suppliers. I mean, that's quite an important one. It's not, we quote, and we've got some stuff where we have to go further afield, but I think when this farm was first purchased by JD and Wallace, it took a while, the first few years, it probably was farmed a bit like a Wallace pig farm. There was quite a lot of cropping, a little bit more in use, and the office up there, the ops manager was up there, you know, just a few little things. It probably didn't really fire until maybe more 4 or 5 years later, where we created an office down here, had a bit more leadership down here, and we've adapted the system, carved it later, less in, no cropping, you know, those sorts of things. So we've created our own rule book for it, which is a very different climate as well down here.
So that's those farm system specific things that are run over this business. Richard, can you just explain this comment down the bottom, efficiency through the pod system?
Or Harry, you maybe to start with on why you bought, that's the main reason for buying this, is that it was a pod opposed to...
Yeah, well, it came about through obviously my working with Tony and Selby, and he said, and I said, I know the guys that want to buy this. JD and Arnie Wallace came here. We just felt that the return on capital and there was potential here. It took a bit longer to get, as Richard said, honing the systems up, getting a Tikawiti identity, and you know, not trying to farm it, you know, farming to the circumstances and the soils that exist here. There's quite, you know, quite a complex series of pretty much most of your major soil types or soil categories exist on these farms. So there's a big difference. But number one was looking for return on capital and an opportunity, and we'd have to say, you know, nearly 20 years in from that move that you know, we're happy with the King Country move, and that's the driver. But the capital growth is, if you're looking for that, is probably a fraction disappointing. The return on capital and the ability to earn is we think, quite high.
And just the pods, I mean, it's lots of things. For example, if I come down for a consultancy visit with a farmer, you know, you can get around the four farms in a day. You know, you're covering 3,000 cows. That's efficient use of time, Matt Bosch's time. There's good, you can harness that bit of the team people stuff on the competition, and they can go over the fence. There's good and bad elements to that. If emergencies happen, there's people step up, you know, next door. So yeah, I think there's just lots of layers that it's a lot more efficient than having 800 cow farms scattered all over the North Island.
So we've talked about some top level business stuff. How do we deliver it over all the farms through this pod system? You give us a little rundown of your structure, kind of your operational management.
Yeah, okay, that might just, whether it floats into the people space, but yeah. I think the key is like that we deliver it because good staff, and you know, Matt deserves all the credit, and all the farm managers. So I think that's and we've probably got nice clear messages. They're not getting confused. Hopefully, not getting confused with what we're asking of them. But if I run through some of the people space thing, look, I think a big thing for us, it starts at recruitment. We do all our own recruitment. We haven't spent $1 on a recruitment agency. I think that is quite unique for a big outfit. I think that's my experience in my work. A lot of big outfits employ CEOs or ops managers, or some recruitment gets delegated because it's no fun, you know. But we do all our own recruitment. We do have, to be fair, some skills in that space. So and farm managers recruit their staff with help. High level of ownership. I think that's probably our number one HR strategy is ownership, and that's, you know, Harry's probably led that from a long time. Empowered, and that's the same with our key office staff. All our farm managers have ownership. They're involved in writing the budget at the start of the year. They get better at it. So some of them, that doesn't mean they've got control of the checkbook, but they get engaged. I mean, I think sometimes Paul Byrne might say at times our farm managers have better control of our budgets than their own. So you know, that's something we've got to work on with them. But I think that's there. They sign off all their own invoices with screened as well. But you know, we don't know if there's 2 electricians working and how long they were there for. And so that sort of engagement, it sounds pretty trivial stuff, but it just all accumulates in the caring. Our goal is really like a owner-operator. We won't, there's things a lot of people can beat us. We can't get 20 years out of a tractor. We can't get 10 years out of a quad. Large-scale, multiple-use operators, you know, so we have to create systems to deal with that. But look, we want some owner-operator efficiency, so we do like encouraging our better farm managers if they can fence and do everything. But we prop them up when they don't. If they need a check, if we need to pay a specialist fencer or to prop them up because they're weak in that area, we will. But we do also rely on the corporate efficiency. I mean, we do a lot of work with JD and Wallace. It's the two groups. There's common management, common shareholders. And so we've got a very good, pretty good office and employment agreements. And those things we can handle pretty well. If, you know, we do make mistakes. If we deal with it quickly. And I was just talking to a guy walking down, you know, we all make mistakes in HR. I think the key lesson we've learned is you just got to deal with it quickly. And you know, it's a cost of doing business at our scale, so manage that. But look, I guess we've got the pathway option, which we think is good for attracting people. Straightforward, profitable systems. We do acknowledge guys. I think the guys are getting reviewed. There's pay scales. There's events. You know, we try and celebrate success where we can with winter and Christmas events and discussion groups. Housing is a big one. Look, we put a huge emphasis on housing. We have a person employed for going around and looking at houses. And And I think the key thing with houses is, you know, it's something goes wrong, it gets fixed quickly. So we, you know, and they felt heard, so we're doing that. And we're big on that because we know how much it costs when something goes really wrong with the house. So we're quite happy to front foot it. And this last one, I think it's an important one. Like I think we do a pretty good job at balancing healthy competition versus encouragement. All our guys see everybody's milk, everybody's, so, you know, whether there's a bit of cell count competition or, you know, grade competition, those sort of things. But equally, if someone's having a problem, you'll be surprised how much privately guys will offer a bit of advice. And also, if someone breaks a leg or something, guys are there to help, you know. So it's just trying to harness a bit of competition and at the same time keep that teamwork going.
So who do you've got someone who monitors housing? Do you have someone in your business who monitors the team culture and these functionalities that you're talking about?
That's a good question.
Does it seem just to happen? Just
I think we've probably rely on key people to give feedback. I'd like to think most staff feel like they can approach most of us if needs be. But yes, look, I think we've got an office lady Ariana that wears a few hats that has a bit of a mother hen element to her role, and
Matt's laughing.
yeah. So like I think that's there. And, it does pop up. I think that's a bit of my job, Harry's job. We get on the farm. I think a really important point here. We're not big. We're not big report guys. Like we've got wonderful financial. Wonderful financial reporting. We've already got the good milk reporting with Fonterra. We've got good. We do like herd testing and records, so we've got the records of Minder in it. But we don't do farm reporting. Look, not completely against it. It's just really from my experience, the data just loses accuracy. They're supposed to be on a 2-1 cover. Well, they're always on a 2-1 cover. And the reality what they tell you on. We just know it's different to what they often are. We can expand on that a bit more. So, I think there's a motivation element. When you've got a lot of farms, you've got to be on farm, engaged. So driving around the farm, the report doesn't show you where the gorse is. There's just those elements. So that's our style. We just like doing regular photos. So Matt very regularly, Harry and I reasonably regularly as well.
So Matt, can I come ask you, I know this is a little bit off the cuff, but can I ask you what your role within this team culture is? So I've spent a lot of time with Matt over the past few weeks, and one quality in him that I can see is his drive and desire to connect with people and not be a leader, in his own style. So I think he's got quite a bit of influence over this culture.
I think what I try to foster and what we foster as a group is that all the managers run their own teams, and that's really important. So there'll be a different team culture happening here than you might say on the farm next door. My role and my role, I'm very big in developing team culture. To me, that's the success of large-scale dairy farming. But it's not how I do it, it's how the manager on the farm does it. To me, that's a real critical point. So it's making sure that manager has their own flair, so you help them along with recruiting. And we've had guys that haven't been suitable to a team, and they can go and move on to another farm where it's a different manager that and they just flourish. So we've got those opportunities too, just to move people around or do progress, development, professional development. They might have a more senior role on another farm. They can work under another manager. So those are some of the real key things that we try to, just low level, informal communication, and then, like a lot of, like our good managers or our good leaders, they take guys under their wing, take them out diving or take them hunting, or a few drinks at the pub, and sort of build up that small rapport but repetitive. You do build up a good culture.
Thank you, Matt. So I'm guessing everyone's getting the feels that we've got good culture, we've got good people, we've got people grow and develop others, but we've got this overarching, amazing, solid business plan behind it all. So now we just want to have a wee look at some of these financial figures. DairyNZ is the only industry body that collects financial and physical information. We can see Kotare are monitoring their own financial performance and with their own goals, but when we look at what we're fronting up as an industry, and Robbie touched on it in his intro, is that as an industry body we share this data. So to me, I'm a farmer too, and I want to see my farm producing a high return. In our booklet, I think it's page 21, you'll see return on assets. Every farm business is going to focus on different KPIs, and I believe you guys are focused on EFS, return on assets, and pastoral crop harvested. Would they be your top three? Yeah? Were you just agreeing with me?
That's fine. Yeah.
Okay, so in the past 3 years, on page 21, we have not seen a return on asset below 7.1. And does anyone know what that means? That means the bank's helping you win. So that return on assets needs to be above the cost of borrowing, which is probably different for all businesses. So, and operating profit per hectare is well above their Waikato average. Now that Waikato average is everything. The pot is Waikato. It is where I farm in Hinuera Matamata. It is Rotorangi. It is Robbie's farms down in the King Country. It's everywhere around the Waikato. So that's an average. And these guys are absolutely smashing it. Even my farm's not that high. My farm's 3.6. So you guys on Ellesmere is doing better than my land that's valued at 70,000. This next graph here, this is taking all of Kotare's or Ellesmere's data and creating some averages around those main on-farm spends. And this is going to come alive in our next session when we start talking about our farm system. Because when we talk about, well, we've talked about the team. We've talked about the value of the team and labour efficiencies. We've talked a little bit about their non-cropping and supplement use policies.
Yeah, and you've got to challenge that and say, well, we do own our own runoff, so there's winter grazing that it shows there, isn't it? So there's a bit of a like with like, and not everyone has the winter grazing option. So,
but just a note on winter grazing. I think maybe it's page. Page 18, I've got some basic oversight of the farm, and we've got imported supplement. That's only imported supplement in the form of PKE. That does not include winter grazing. I didn't include winter grazing because this captures the whole farm system and we've got this amazing farm management plan that we're going to share with you guys, and that's kind of like the magic. It's the secret of what we do here. Really stands out. Is there any other comment you want to make there, Richard?
No, look, I think it's just we've always been conscious of farm working expenses as a key driver of profit, and so we've had good ownership of that. I think, basically we go back a couple of years in my work in the DairyNZ, it basically jumped 2 years, didn't it, with the big inflation. Over 2 years it jumped $2. Whereas we weren't immune, but we only jumped $1 probably, and then we've clawed a bit back, hopefully, since then.
So what did Robbie say at the beginning? All those shiny things, all those new technologies, the things that we have dripped into our system, you guys have resisted over time.
Some of it was food expired, a lot of commodities, so but it's what was within your control. So we have tried, and that's part of the farm system, we've clearly tried to nail a system that is less vulnerable to inflation over time. And that, your nitrogen cropping, those sort of big costs. So you look what, ryegrass seed has done in the last 20 years versus milk price as an example. So that's how we've done that. I'd also note that we're not owner operators, so there are times we're conscious that we actually want to spend 30 or 40 more cents on what you'd call good R&M some years. So like a year like this, we were we're hoping for a bit more production. But we're not so much on this farm, but on a couple of other farms, we have opened our shoulders on R&M and probably a bit of capex, but it does come up in here, drainage. So it's all houses, so it's still under that criteria we're making decisions with.
And it's a system that's based specifically on this farm, on the resources available. It's a bespoke plan. It's not something that can be run out everywhere. It is specific to this farm and what resources they have. So, in a nutshell, if people want to run a high profit business, benchmarking, the stuff from DairyNZ, and financial data that Kotare collect behind the scenes, monitoring this data needs to be bread and butter. It needs to be every day, needs to be integrated into our system, integrated into the way we manage the business. It's even integrated in the way they're working with their teams, taking ownership of budgets. This is really powerful. If one of our managers actually understands the cost of this or the benefit of that, they take ownership, they take it on board.
Just like the teams, just to double down on it, it's hard to explain. There's just lots of little things you can do. Like we could enforce we could get a bulk deal on two-wheel motorbikes and just make it, that's what you're using. But one guy does like a Suzuki, one likes a Honda. It's just not that big a deal. It's more that they're enjoying it and take ownership. We won't let them get a Kawasaki 250 or anything, but
they're dangerous machines.
So there is, and it's a bit like the same. In tractors, we probably have a bit more control over to their disappointment, but there's things you can do, like little things like the calves that are born on the farm. They've all got their own herd codes. They go away to grazing. They come back to their farm. They're not scattered everywhere. It sounds a simple thing, but it's important for. They're putting the effort in. They're getting the good results. They're raising the PW. They want. It's all little things that involve that ownership.
It's sort of part of pride and that buy-in. There's nothing worse when you're on a farm and you've got heifers returning and they're not your heifers. I never raised them, but hey, there's lots of magic things that you add into this. All right, well that brings us actually to the end of this first session. We need to think about getting into the car. Right, but everyone's going to stay here and use your taringas because it's actually stopped raining. Hang on, I need to change pages. So me and Matt have created this because we want everyone to get up to that site. Yesterday when we were here, it was wet, it was slippery, it was muddy, and we were thinking we might just go for a walk up the hill and that's all we get to see. But we made this happen. We're going to go for quite a substantial drive over the farm, and we've set up another stage over the back of the paddock, and we get to look out over the valley or the area that's Harry's developed through drainage, and we get to see right down the valley, so it's really cool. Matt is going to go jump in your car because we're all going to follow a white ute. Okay, so don't try and be a trailblazer and lead the way. Matt's going to do it. We would like four-wheel drives only. It's a bit slippery. There's a bit of mud. We're going to come out of this parking area and head down towards the exit and then back up past the farm dairy. Feel free to grab a water bottle or a coffee on the way from catering as we go through. We're going to go up the hill past the herd. That herd there's 250 in there, that's the once a day herd at the moment. Tracks are muddy, please drive safe distance, don't go over 20 k's, and when we get into the paddock we're going to have a couple of parking wardens. What was that, Olin? Oh, thank you. Right. We're not off the hook yet, guys. Questions? Please, I need some mic runners. Who's going to kick us off with a question?
My question just around your net asset value increasing by 5% every year. Can you give some examples of how you try to achieve that, whether it's, I suppose, inside the existing farm or whether it's additional investments?
It's a good question. Like that can come any way. It doesn't have to be, you know, like we've occasionally bought shares, LIC shares or Fonterra shares at times, you know, so we'll look at other things to drive that. But the bulk of that is not capital gain. We're down here, like we're not really, if we're analysing an investment opportunity, we wouldn't be factoring in capital gain probably for the last 10 years. So we're really saying, look, if we're borrowing at 5, we've got to be doing a 10% EFS that works out to 10%. That's the main driver.
Retained earnings are quite significant in that. Retained earnings are quite significant in that. We've continued to repay debt here and have had that policy for quite some time. So it's and I think there is, as we'll see when we get up on the top of it, there's genuine land improvement. So if you take a waste area that's could be wet soils, and it might be in some people's eyes a wetland, in other people's eyes it's a wet area. You get 4 or 5 scientists on that and they'll all disagree, but you make a decision and you can't be somewhere in between. So we either retire that, but where we can develop it, we add to the effective area. This farm enjoys quite a high effective area relative to its total area, with only just behind us the only significant waste ground on this property. The others have, but there's been development when we get over the ridge, where it's probably bordering on 20 or 30 hectares that have been substantially improved. So you can drive a car over them today where you would have only really got across them by foot. So
Just as well to back on that, the paying debt off bit's important. We're not a business that runs massive debt. We never have been, because we don't probably, we've got the key investors have got worlds outside of here, while growth's the motivator. You know, when you're a big syndicate, or a couple of families, but there's a lot of stakeholders, you need that option, and that goal of being able for someone to exit without the world ending, or farms having to be sold or divvied up. We probably never want to get to 80-70% debt. So, you know, we're always paying debt off. So we're never going to leverage to 80% to drive a double-digit NAV gain or something like that.
You've got a dairy runoff or dairy support attached to your dairy operation here. How do you ensure that there's no cross-subsidisation, or actually don't have a culture where the runoff becomes a dumping ground or an excuse for management on the dairy farm? How do you ensure that is?
Thanks, Kevin. I'll take this one. I think Dad's answered a few of your questions over the years more, so we'll, look, a huge challenge. I think the first thing we do is that it is, rest assured, everything is at full market rate. The runoffs all have their own budget. So they and the farm managers on those runoffs are empowered to champion their cause. They can send sick calves home if they want to, or underweight calves on arrival. You know, you've got to create the rules, really. So in saying that, you want them to help, be there to help, and you know, and all that. But that's all. The best we can do is the full market rate thing. But they're hard. We probably find the runoffs hard to make money. It's just that salary. A lot of these farms, let's call a normal 400 hectare king country farm, it's probably an owner operator, husband and wife team, and they cover it. And there's no relief, and they're the office, they're everything, aren't they? And just under the modern staffing structures, they're getting quite expensive to run. But yeah, Harry, you got anything else to add to that?
Farmers charged with making a profit, so and Richard's point about the dumping ground. So we will stock trade. The manager the manager of the support farm. He is, and I don't know whether Mark is here today. He ranks in military terms exactly alongside all the other managers here. So he is not their private that they can order around. He has full authority, and we have a sort of little golden rule that if always the manager of the farm and the manager of the support farm sorted out your problems between you, because if we get involved, both of you will be disappointed. So and it seems to work. Mutual respect, really. It's and you know, that's the point.
So this question is around compliance and cost of compliance. Have you done any analysis of that, and what's your thinking and process, and we're interested in reducing?
Good question, Dennis. Look, we haven't done the analysis. I guess when it's a bit about being upfront. What would you say? Like, you know, milk cooling is an example. It's quite nice to sell milk cooler and in the north, but that's been quite a big cost, and you think you're on a winner, but then as time rolls on, the R&M for it. And, you know, that's our challenge. But we take that up a bit with Fonterra around. We're happy to spend more on compliance. You just got to deliver on milk price. And we're in the camp that we're a bit wary about these sort of that world. But we have to create systems that are a bit bulletproof. What's bulletproof for an owner-operator who's there every day is very different to what's bulletproof for a new manager, or a farm where the manager's on holiday for a few weeks and it's the junior boys. You know, so we have to invest in systems, but we're trying. Whenever we do something, we're probably looking. We won't get sucked into building something on a 500 cow farm for a 1,000 cow feed pad situation, which will get tried to solve with effluent or milk cooling or anything. But we will, and we're also looking at what is it going to cost us an R&M over the next 10 years. But we're not engineers. It's not our great skill. We rely a bit on the managers on the ground. But we just probably suck it up and move on.
I think there's another little part to that, and about 10 years ago I hosted a Fisher and Paykel advisory director to their board, a doctor, and the principal. I took him through the freezing works in the UBP plant in Kuiti, which he enjoyed and I enjoyed, and we all went away pretty proud New Zealanders to see the productivity that was taking place. But in driving around here, he said, you guys don't know how to tell a good story. And you've got a good story, because we had planted the Mangapū stream had been planted by then, and most of our waterways are all fenced off. But he said, you're not telling anybody. And I suppose the cost of compliance on offshoot from that is, are we making a good enough job of telling them the world? I'm always very reluctant. A couple of people have come up to me today saying, you've always had a low-key philosophy, and I still do, but sometimes you've got to, there is a good story to tell, and both environmentally and compliance-wise, if we get our effluent story right, it's a pretty good story. It mightn't look very good, but it certainly is a good story. But I think it's an area we've got to do better. But
I'm not sure what the structure is with your staff, whether they're all on wages or contracts, or contract milkers. I'm just wondering if you could expand on that. If they're not contract milkers, why not?
So we've got all farm managers in Kotare. One is an equity manager, and Matt Bosch has got an investment on a farm, but and Giles is equity on the lease farm. So we've got one equity, all managers. Look, why not? It's always been that way. We've got the office, we've got the administration capacity. We have no fear of people, enjoy people. Have had one contract worker down here. We've had a couple at JD and Artie Wallace. It's probably just not in our DNA. We like giving a lot of farm management ownership away. But we don't really like going on a farm and, I guess seeing a very old bike, or we don't see like the contract milker you know, farming from a walkie-talkie, but that can happen under a management structure too. So, yeah, I think there'll be a time where it's on our, it's not completely ruled out, but we've just had more success with farm management, and we're probably nailing a bit more to a guy that is up for a wealth creation pathway. The notional lease equity model suits us. We just like being all in it together. I think if milk price goes up, we all benefit. If he crashes the tractor, we all suffer. You know, like we just like that. That suits us.
We've a long history of supporting the equity model. Hasn't been perfect, but we have hit on what we think is a very good model, and that's the equity model on a lease farm. And it might be a notional lease farm or a real lease farm, where we would, and we have several of these in our wider group that are proving to be pretty successful, so that the owner, if you like, the major shareholder owns the land, leases it to a joint venture that might be 70–80% themselves, and 20–25% the equity manager. That's sort of panning out pretty well, but is probably only for you know, elite operators get that opportunity. So that's probably why it's one of the reasons it's going pretty well. Believe very strongly in trying to make some form of equity participation work, and it's still work in progress. Been some lovely stories over the years when land values were increasing, but it's very, very hard to make the equity model work when you've got no capital gain in the land. We spend quite a lot of time talking to people about outside financial advisors and within the industry about getting that model, but that's one which we've settled on, and think it's got, you know, going to be part of this thing that's happening here.
And we'll hear more about these models in the third session. Any more questions? Should we head out on our drive? Okay, folks. I want to hear from two people. What were my main key messages to get up to our farm site 2 safely? Follow the white ute and be careful of the muddy surfaces. Forward drives, please. No one on